Every empire believes its money will last forever. The Dutch did, the British did, and now the Americans do. But history has a law that no empire can rewrite. When the world's reserve currency begins to rot from within, the end always starts the same way, quietly, invisibly, then all at once. The story of money isn't just numbers and charts, it's the story of trust and the slow erosion of it. This is the hidden cycle that has ended every major empire, and it may be happening again right now. The world's first true reserve currency wasn't American, and it wasn't British. It was Dutch. In the 1600s, the Netherlands was a small country with a big advantage: ships, trade, and discipline. Amsterdam was the Silicon Valley of the 17th century, the center of early modern commerce. The Dutch guilder became the most trusted currency on earth. Why? Because it was backed by real silver and managed by one of history's first central banks, the Bank of Amsterdam. It allowed merchants from Asia to the Americas to trade without fear of debasement. For nearly a century, the Dutch Empire ruled global trade finance. The guilder was the gold standard of its day: stable, reliable, unstoppable. But power breeds pride, and pride always invites competition. By the early 1700s, the Dutch were financing wars they could no longer afford. Their ships aged, their debts grew, and quietly, the British pound began to rise. The guilder's fall wasn't sudden. It was a slow leak of confidence, investors realizing that a nation's credit is only as strong as its restraint. And the Netherlands, once the model of fiscal discipline, began to borrow from the very merchants it once financed. The first lesson in reserve currency collapse was written then: money is power, until power needs more money. When the British pound took the throne of global trade in the 19th century, the British Empire ruled a quarter of the world. Every ship that sailed, every deal that crossed oceans, every ounce of gold traded, all priced in pounds. The British trade system was the most efficient in human history. The pound wasn't just paper, it was a promise. Each note could be exchanged for gold on demand. That trust made London the beating heart of the international monetary system. But behind the glory, cracks began to form. Empires don't collapse from weakness, they collapse from overreach. The cost of maintaining colonies, navies, and constant wars of expansion strained even Britain's deep coffers. The Bank of England printed more, borrowed more, and trusted that prestige would protect its currency. And then came the First World War. The pound, once as good as gold, had to be abandoned. Britain suspended the gold standard to finance the war, flooding markets with paper money. When the guns went silent, the empire's debts screamed louder. The world's confidence shifted, slowly, almost invisibly, across the Atlantic. The United States, rich in gold and industry, began to rise. In 1944, at Bretton Woods, the new order was sealed. The dollar will lead, and gold will follow. But could America escape the same cycle that doomed the empires before it? The 20th century was the age of the dollar. After World War II, America held over 2/3 of the world's gold reserves. The dollar was more than a currency, it was a symbol of dominance. Every global contract, every barrel of oil, every reserve bank on earth, all tied to the dollar. This was the new global trade finance system, backed not by an empire of colonies, but an empire of credit. But history is a patient teacher. The same pattern began again. America's prosperity came with expansion, and expansion came with debt. The Cold War, Vietnam, domestic spending. The United States was writing checks that even its gold couldn't cover. By the 1960s, foreign governments, led by France, began demanding gold for their dollars. The U.S. gold reserves bled. And then, in 1971, President Nixon ended the gold standard, closing the gold window forever. From that moment, the dollar was no longer backed by metal. It was backed by trust alone, a fiat system floating on faith. But faith is fragile, and debt, when unchecked, becomes addiction. For 50 years, the dollar has reigned supreme, not because it's perfect, but because every alternative has been weaker. But beneath that dominance, something familiar is happening. The U.S. now carries a debt of over $35 trillion, with deficits that no longer shrink, only grow. Inflation, once considered dead, has returned. Interest payments on that debt are higher than America's defense budget. Yet the world keeps buying dollars, not because it wants to, but because it has to. The international monetary system is built around them. Oil is priced in dollars. Global trade is settled in dollars. Central banks hold dollars as reserves. But how long can a system last when its foundation is debt? The Dutch guilder lost its dominance after debt-fueled wars. The British pound fell after overextending its empire. Now, the dollar faces both global commitments and record deficits. The question is no longer if history repeats. The question is, how close are we to the rhyme? Empires rarely recognize their own decline. The Roman Empire debased its denarius for decades before citizens stopped trusting it. Spain flooded Europe with silver from the New World and triggered runaway inflation. Britain financed its glory on borrowed gold until the world refused to lend. And now America finances its dominance with borrowed dollars, created at the click of a button. Each empire believed their currency was different, more advanced, more trusted, more permanent. But trust is not technology, it's psychology. Today, nations like China and Russia are building currency alliances to bypass the dollar. The BRICS bloc is exploring trade settlements in gold and local currencies. Central banks quietly are buying gold at record levels, not to speculate, but to prepare. Even digital currencies, from Bitcoin to CBDCs, are emerging as escape valves in a system stretched thin. Could this be the start of the dollar's last chapter? When does a reserve currency collapse? Not when it's challenged, but when its own citizens lose faith. The dollar's real strength lies not in foreign reserves, but in domestic belief. The trust that savings retain value, that wages mean something, that tomorrow's dollar is worth what it was yesterday. But in a world of stimulus checks, trillion-dollar deficits, and relentless money printing, that faith is wearing thin. The pattern is repeating: overconfidence in global dominance, debt-fueled expansion to sustain it, loss of fiscal discipline, a crisis of confidence. Then comes the turning point, when nations begin to quietly shift away. The Dutch didn't fall in a year. The British didn't collapse in a decade. It took generations, slow erosion before the dam broke. But every cycle ends the same way, with a sudden event that crystallizes decades of denial. For Rome, it was the barbarian invasions. For Spain, the bankruptcy of its crown. For Britain, World War II. What will it be for the dollar? A debt crisis, a geopolitical shock? Or something even quieter? The world simply moving on? No empire believes it will end until it does. The signs are rarely loud, they are whispers. A currency that buys less each year, a government that borrows more to hide the pain, a world that slowly starts to diversify, not out of anger, but out of prudence. History doesn't repeat perfectly, but it rhymes with eerie precision. The Dutch, the British, now the American. 3 great currencies, 3 empires. 3 collapses born not of invasion, but of inflation. The world doesn't collapse in war anymore. It collapses in confidence. If the dollar is writing its final chapter, it won't announce it with explosions. It will happen the same way it always does. Quietly, invisibly, then all at once. A shift in global reserves, a sell-off in treasuries, a sudden rush for gold, a crisis of trust. Then the headlines will come, the dollars fall. But by then, it will already be history. The truth is simple, and history has proven it time and time again. No empire, no matter how powerful, survives the collapse of its money, and the clock is ticking.